Ulta Beauty is trading at a PE of only 15.4, which is a 50% discount based on their 5-year average PE of 31. And despite the recent dip in price, Ulta has still returned 360% over the past 10 years. But are they a buy now with the S&P 500 near all-time highs? Today's video will be an in-depth analysis of Ulta stock, covering business operations, fundamental, and technical analysis. Ulta operates stores in every U.S. state and breaks down their business operations into 4 main segments as a percentage of revenue, with 2 negligible business segments. Their primary business segment at 41% is cosmetics, followed by skincare at 19%, hair care products and styling tools at 19%, and their last meaningful segment is fragrance and bath at 15% of revenue. They currently operate 1,355 stores as of February 2024, which is a substantial 15% increase compared to 5 years ago when they had only 1,174 stores. They also operate boutique-style stores within Target and currently have 500 stores, which is a massive 500% increase since the beginning of their partnership with Target in 2021, when they only had 100 stores. Speaking of stores, they're predominantly an in-store business rather than an online business, with 76% of their members purchasing products solely in-store. Their store experience is what draws consumers in and keeps people returning. It's well-lit and designed to attract. Personally, store experience doesn't matter much to me, but to Ulta's target audience, it does. And they've created a store environment that draws customers in again and again. Now let's cover the macro level pros of Ulta's business. Beauty products, although they might seem not essential, they are to the customers who buy them, which can be visualized through Ulta's insane revenue growth over the decade, which has averaged 16% each year. Or if you look at one of the most shoplifted items after meat, razor blades, and alcohol, it is cosmetics. Furthermore, Ulta is a high-margin retailer with an average operating margin of 15.5% over the decade. Another benefit to their business is they don't have to innovate as a retailer. They simply sell the products that other companies continue to create and improve. They also have a winning loyalty program which gives you store credit for every dollar spent, which is clearly successful as 95% of Ulta's customers are loyalty members. And as the customer spends more, they earn more loyalty points, which they then use to purchase more products in the store and online, perpetually. Furthermore, through the loyalty program, Ulta knows what almost every customer is buying habitually and can shift their products accordingly. Better yet, Ulta is continually increasing their store count year over year, and since 2011 to today, they have more than tripled their stores. Lastly, they are continuing to increase their advertisement spending year over year too, which is another growth catalyst. All these forms of growth tactics have paid off historically, which has made Ulta the largest beauty retailer in the US. Ulta is proving to be an amazing business, but there are some risks to consider. The first is the rise of e-commerce. E-commerce is trending and giving consumers the ability to find the best price from the convenience of their home, which could eventually topple Ulta's in-store kingdom. Another major risk is selling beauty products under their brand that could have the potential to harm users of the product, which could result in massive lawsuits against them, resulting in huge payouts like what happened to J&J with their baby powder, resulting in a $700 million loss. Another potential risk is that Ulta doesn't own any of their stores. They lease or sublease each one of their stores, meaning they will continue to pay higher and higher rents throughout time. Although this could be seen as an ability to drop unprofitable stores more readily and increase store mobility. Lastly, though they have increased their stores significantly over time, their most recent year store growth has slowed, which is partly why the stock has plummeted, in addition to increased held merchandise and slowed revenue, which we'll cover later in the video. Ulta faces major competition in the beauty retail space, with their main competitor being Sephora, which is an international beauty product retailer that is not publicly traded, so we won't use them for comparison. Otherwise, Ulta competes against various merchants like CVS and other similar retailers who sell beauty products in addition to other goods. They also compete against many online retailers for beauty products too. Now let's get into the foundation of the business, starting with revenue. Ulta's revenue has grown phenomenally over the decade, growing from just $3.2 billion in 2015 to $11.2 billion as of 2024, giving Ulta an average growth rate of 16.2% over the decade and a CAGR of 13.2%. You might think the growth is slowing since 2022 when it peaked at 40%. But if we take the average growth rate over the last 3 years, excluding the pandemic downturn, we end up with a growth rate of 23%, which is in line with their early growth at the beginning of this period. If we look at their EPS growth, it's even better still, having a mind-blowing 10-year average growth rate of 42%. If we compare that to one of the best businesses I know of, Visa, with a 10-year average growth rate of 17%, Ulta makes Visa look like they're standing still. Their amazing EPS growth is partly a function of having substantial share buybacks at a share reduction CAGR of negative 2.6%. Which will likely continue into the future and is a perfect representation of compounding growth. Ulta's story gets even better when we look at their total liabilities compared to net income, currently only at 2.7 times net income, and their total liabilities have only grown slightly, which indicates strong financial health. Last on the balance sheet, we see their cash is at a solid $766 million. And hasn't had much fluctuation. I typically cover and buy dividend stocks, but Ulta does not pay a dividend. You need purely be buying for price appreciation instead of income. In terms of valuation, Ulta is currently trading at a huge discount. A trailing 12-month PE ratio of just 15.4, which is a 50% discount compared to their 5-year average PE of 31. If we compare that to Ulta's peers using the consumer discretionary ETF VCR, which Ulta is held in, the average PE ratio is much higher at 24. Although Ulta is technically considered a consumer discretionary stock, beauty products are essential to the customers who buy them and is truly more of a staple, and has proven to be resilient and consistent. In summary of the fundamental analysis, Ulta has been a growth machine in terms of store count, revenue, and EPS. They're reducing shares, they have very low debt, and are trading at a huge valuation discount. I recently purchased Ulta stock, which I shared with my subscribers on Patreon, and I see a huge upside with little risk. Here we see a 5-year price chart for Ulta, and we have a few key aspects of this chart to interpret, starting with price trend, which is moving in the right direction. Although over this period, Ulta has only returned 8%, which to me, again, indicates value to the upside. Next, we see the standard deviation channel, which is a tool that enables us to determine how far price is from average, depicted by the center yellow line. Part of my criteria for buying a stock is that it trades below the average price, and currently, Ulta is 24% below the average price of $500. Better yet, it's near a prominent support level of $370. Lastly, the relative strength index graphed at the bottom of the chart also indicates a strong buy signal, as it is near the bottom of the channel. And the last time it was this close to the bottom of the channel, in October of 2023, price rocketed up, going from $370 all the way to new highs of $574, which would have resulted in a 55% gain over a period of only 6 months. So from a technical perspective, and a fundamental perspective, Ulta looks to be at an amazing buy point. Full disclosure, I'm long Ulta stock. Are you buying Ulta? I'm not a financial advisor, and this is not financial advice. This is for educational and entertainment purposes.